Hello and welcome, Just a Family. This is giving you something to talk about, or just a live TV as I like to call it. I'm your host, Melissa Krechler. I'm an identity coach, spiritual teacher, business mentor, and creator and founder of not only Just a Live TV, but also the Women Supporting Women Can Network, where you can join that Facebook group anytime, anywhere. Today's episode has been sponsored by Millie, Gormely, and I hope I pronounced that right. She is a certified financial planner who helps women plan for their future, plan for their retirement, all of the stuff that we're going to be talking about today. Well, majority of it, Millie does. So go and check her out. Her scheduling link is in the description. So go and check that out directly in this video. We're going to be talking about financial planning today, and I'm really excited about that. Millie works for a company that I used to work for, and it was one of, I love the job. There's things I didn't like about it, but I definitely like the impact that it had. I love impact. So Millie, I'm going to hand it over to you to introduce yourself for a moment, and then we'll jump right into financial planning.
Awesome. Thank you very much, Melissa. So yes, my name is Millie Gormely, and I am a certified financial planner. I've been in this particular end of the financial services industry since 2006. So I'm an old and grizzled veteran of the financial planning wars, as it were. And I love what I do. I mean, I've been working with women for a very long time, and I, like Melissa saying, I love the ability that we have as planners to really make a big difference in how people can run their lives, because money is tied to so many other things. It is not a substitute for wealth or for health. It is not a substitute for good relationships. It is not a substitute for fulfilling ways to spend your days. But all of those things can be made a lot better if you've got a little bit of cash to work with on the side. So that's why I do what I do.
Absolutely. So so for anybody who doesn't know, Millie works for Investors Group. We do have that Investors IG Wealth Management. It's called
IG Wealth Management. Yes,
recent rebranding. It was Investors Group when I started. Yep. And Investors Group was actually created where I live. So I'm in Winnipeg, Manitoba, Canada, and that's actually where our head office is in Winnipeg, Manitoba.
And it will remain there, actually. So our new CEO was asked about that a few weeks ago, and he said, no, we are a Winnipeg-based company and we're going to stay here. And I kind of appreciate that. Yeah, right. Because it's very much about the clients. It's very much about meeting people where they are and making sure that we're taking care of people who aren't necessarily going to get the proper service from, say, a bank or from another investment firm. Because although certainly IG wants to be working with clients who have a lot of money, we don't turn people away because they don't have a lot of money. And that's
exactly.
Well, when I started with IG, I was actually a client. I was like 19 years old, my first job out of college, making $12 an hour, which was good money, back in the days when dinosaurs roamed the earth. And one of the first things I did was start up an RRSP with IG, putting in like $25 a month, because that's what I could afford at the time. But it's a start. It's getting people started. It's getting people into that habit of saving. That's really important.
It absolutely is. You know what? I love that you just mentioned that they're staying in Winnipeg. That was, I have a dream. We all have dreams. I have my mansion or my beach house dream, right? And so I literally have a search on realtor.ca. I've saved my search and it's for mansion. It just says mansion. I don't like so I go through the mansions just about daily, right? Just to get, I like this and I don't like this and I like this, right? I want a house big enough or a property big enough that I can have all of my kids together.
How many kids do you have now?
I have 4. Okay. But enough space that they're not going to be there.
Right? In the general vicinity, but not in your face all the time.
Exactly, right? And they have their privacy.
Balance.
Yeah. And my kids age between this year, all of my children will be 8 to 20. So they have, that age range. And so I'd love to have them all here, but have them still have their privacy and their comfort and all of that, where, I'm not walking in on them or anything that I shouldn't be. And they have the freedom to do what they want, right? So most of my kids will be like, Mom, you're crazy. And I'm just like, no, this is going to happen. One of these days it's going to happen. Even if I have to buy a bunch of modular homes, or even just build a bunch of different homes on like this acreage where I always tell my husband, I played the lottery. I absolutely buy my Lotto Max tickets. And it's funny because I keep telling my husband, I said, when I'm in the lottery,
Okay.
I'm going to build myself not a quarter-mile track. I'm going to build a mile long track, or even 3/4 of a mile track, just so I
Okay.
can buy all the fast cars and race them down the track by myself. I'll buy like 5 or 10 cars, race them, and then sell them
You got to have
until I
dreams,
find my
man.
favorite one.
You got to
Right?
have
But
dreams.
but everybody does, and I think that's a
Yeah.
great place to start this video. Is everybody has dreams, right? Investors Group, or IG, was a dream. It was somebody's dream,
Yeah,
right?
absolutely.
Again, my husband and I are talking, and why I was talking about the mansions wasn't necessarily the dream, but I was talking to somebody else the other day, and I said, I want to be the next Oprah. I want to be the next life-changing woman. And
Mhm.
how amazing that I come from Winnipeg, right? And they're
Yeah.
like, most Canadians, if they're from a small town or an underrated town like Winnipeg is, don't get me wrong, we have horrible stats, but most of the people who find that success move away. They move to
Yeah.
Vancouver, Toronto, Calgary, Edmonton, Montreal, Ottawa, all of these places. They don't stay here.
Yeah.
So for IG to say we are a Winnipeg company is amazing, and I absolutely love that. So I wanted to sidetrack on that for a minute, but
Yeah.
it is
No,
those two people.
and I appreciated that too. So I'm in Thunder Bay. Speaking of underrated cities, we won't get into stats there, but yeah, I mean the fact that the company is maintaining that commitment to Canadians is it's that made me feel pretty good about it. I mean, I've been in this business a long time. I can't always say that I felt good about because back office. Well, can I swear?
Yeah.
Back office will piss you off to no end some days.
Mm-hmm.
Compliance and paperwork, and I mean, there's a lot of stuff that clients don't see that the consultants have to put up with when it comes to working with any company, and it's not just IG. I can't take it all the way there, but it is really nice to be working for a company that I can be proud of, and I haven't always been able to say that in my career. So that means a lot to me. Like having that working for a company that has that integrity is important to me because I'm a person who wants to have that integrity, and I want to show that and give that to my clients. So it's all part of a big piece, right? And it's not. Yes, it is about selling product. I mean, if you were my client, I don't make a heck of a lot of money unless you are either putting money away or purchasing products. But it is more about the relationship and the long term help that I'm able to give you, and that's important. It's absolutely crucial.
Yeah. No names, but did you do training with the woman that I did training with? Oh, she was the trainer in Winnipeg for years, and I loved her. She was amazing.
I
Um,
couldn't tell you. It's been so long since I did my training.
I think she's now a life coach.
Oh, really? Okay.
Yeah. Last time I saw her, I saw her on LinkedIn a while ago, and I think she's a life coach now. I think she transitioned into something else, which I
Interesting.
thought was amazing because I was already in coaching by that point. I'm like,
Yeah.
yay.
Well, there are a lot of aspects. Well, certainly there's a lot of aspects of coaching when it comes to like corporate training. There absolutely is. And there's a lot of aspects to coaching in what I do with my clients as well, because it's not necessarily about being a life coach, but certainly when you're talking to someone about how they're spending their money and how they're organizing their investments and what their dreams are for the future. Yeah, there's definitely elements of coaching that come into it for sure.
Yeah. I know people who their entire life is based around their bank account, and their emotional health is based around their bank account.
Yeah.
And
And that's
I'm like, money's not everything, but for them, it changes their outlook.
it
You know what I
does.
mean? It changes their mindset. It changes their ability to think and just be in the moment when they
Hmm.
don't have to worry about that income, and there's significant amount of money in their account. They're calm, they're collected, they're relaxed, you
Yeah.
know, and then they get into a cycle, but we're not going to go into that because that's
Yeah.
not what
No,
this technically is
yeah.
about yet. But financial planning for me, when I was a financial planner, because again, I worked for IG, When I was a financial planner, I absolutely loved it, but I never liked the pressure. And IG is not a pressure company, which is nice, but
A
there's still the
comparison, yeah.
pressure to there is the pressure still to get clients, to make yourself known. There's a lot of cold calling. There's a lot of,
Well, there used to
relationship
be.
building.
There used to
Yeah.
be. I mean, yeah, that's the thing. I mean, there's not,
And I'm
it's a
talking
business.
7 years ago.
Yeah, exactly.
So,
It's a business, and a business that's not growing is dying. So of course, the company wants us to be out there, to be meeting with people, to be talking to people. But the thing is, there's natural cycles. So as you're bringing in new clients who are just starting their financial lives, or they're at a transition point in their lives where they really need a lot of help right now, and you're putting a lot of work into them, there's people sort of on the back end who, okay, well, now they're retired, they're starting to spend their money, they're pulling it out, or they pass away, and the money either goes to their estate, or whatever, it's gone, or you don't need to be working with that client anymore now that they've shuffled off this mortal coil. So there's always going to be a transition in any advisors, in any planners, what we call a book of business. So yeah, it's maintaining that flow of clients coming in, clients who are in a place where they don't need a lot of work right now, clients who are in a point where they're starting to think about their estate planning a little more, and you're working on that with them, and clients who have transitioned on to the next phase, and they're no longer in your book. So yeah, it's always about meeting new people, and that's one thing that I've made a pretty strong goal for myself, is that I will never turn down an opportunity to speak to someone new. So, even if they don't necessarily turn out to be a good fit for me as a consultant or as a financial planner, we've had a conversation. I might have been able to give you a good tip or two, and you're going to leave feeling better about, your whole situation than when you started. I am a big believer in not beating people up for the decisions they made in the past. Like sometimes people are afraid to call a financial planner, to have that conversation, because they feel like they've made bad choices, and maybe they have. But that doesn't mean I'm going to beat you up over it. It's very much about, here's where you're at. Let's get clear about where you're at. Spread everything out on the table, if people still deal with paper, and let's just a really good understanding of what the situation actually is. Once you do that, then it's like, okay, well, how do we improve this? How do we make it work? How do we fix it, for lack of a better word? And that's it. I mean, there's no point in beating yourself up over decisions you made in the past. All you can do is do better tomorrow.
Yeah. No, absolutely. I forgot. I still have it 7 years later, and I still have it. I literally, it's on my desk, because I'm still a consultant, in various different positions. I'm still a consultant. So I still, it's on my lamp in the corner of my desk. So I absolutely love it. But the thing I really liked about financial planning was giving people awareness. And I like that you said that you don't beat them up, because that's not the purpose, right? You could have done X, Y, and Z in the past. That's not what we're talking about. We're talking about, hey, if I, as a financial planner, not anymore, but if you, as a financial planner, if I can go to you and say, you know what, I messed up really bad, I'm drowning in debt. For now, can you help me figure out how to get out of it?
Yeah.
And then help me put away and save and plan for that future. Asking for help. There's no shame, blame, or any of that in asking for help.
Preach,
right?
sister, preach.
And that's what it is, right?
Yeah.
Financial planning isn't about being rich. It isn't about taking all of your money and putting it away. It's not about, counting every penny, but it is about a multitude of different things. Budgeting, making sure that you have enjoyment money, making sure that you have retirement money. If you want to go on vacation, having different plans for different things, right? I have 8 bank accounts, right? Like, they all,
depending on what your life looks like, that could theoretically be considered a bit excessive, but it works for you, then that's what matters, right? And that's the other thing too. I mean, there's no one way to organize your finances. There is no one perfect investment strategy. There is no one perfect financial plan. A financial plan is a living document. It's something that is you're going to be tweaking it, you're going to be adjusting it, you're going to be customizing it for your particular situation and how you want to live your life. So it is really important to kind of take that attitude towards it, that, well, okay, put it this way, nobody's life runs as smoothly as a computer projection is going to make it look. You see those little charts and it goes slowly, and nobody's life runs like that. It just does not happen. You lose your job, you get a better job, you get married, you have kids, you get divorced, like all these, and never mind what the market's doing. That's just you, right? And the market is constantly doing at least that, if not this. So yeah, the idea that we can make a plan and then have it be set in stone for the rest of our lives, it doesn't work with money any more than it works with the rest of your life. So the idea is that you get something in place that's going to set the direction, and then you course correct. You get together and you look at it 6 months or a year later and say, okay, so what's happened since then? What's been going on in the markets? What do we need to do? Do we need to tweak it? No, it's looking good so far. Oh, great. Then we'll talk to you in 6 months, or whatever the time frame is that you agree on with your advisor.
Yeah. And that's the thing. Your advisor is just somebody who advises you. Mm-hmm. You make the decisions. You have the fluidity to say, hey, my goal has changed, or my circumstances have changed. Hey, I got a raise, or, hey, I paid off this debt. I have this extra money now that I'm not putting towards that debt. And then you have that capability. And if you have a financial planner that says, hey, why don't you try this, or why don't you try that, or you as a financial planner have different outlooks and different possibilities that maybe the everyday person isn't thinking about when they do their budgeting, when they do, try to get themselves out of situations or have plans for future events, whatever that looks like.
Is that neutral third party. And it's also someone who can really take a look at the big picture, because certainly in the day-to-day of it, if you're someone who's got spending issues, right, and you don't know where all the money goes, you hear that a lot. Well, sometimes having someone else take a look at your books is going to be very helpful, because it's easier for me to pick out the patterns in what you're doing when I'm not so close to your situation. So I can look at your bank statements and say, okay, well, what's all this that's happening here? Why are you taking, well, something I used to see at the bank quite a lot, unfortunately, was people who would be making multiple withdrawals from ATMs. There's a certain code that tells you if the ATM is at the casino, right? So you're looking at their bank history, and it's like, okay, you're making multiple withdrawals from an ATM at the casino every day. We need to talk about that. Yeah.
Mm-hmm.
Yeah. And sometimes these conversations are difficult, right? Sometimes you do, even though I don't believe in beating people up for making decisions in the past, you can be damn right, I'm going to be calling you on bad decisions you're making now.
Yep.
And
in a way of, you're hurting yourself.
Absolutely.
Right. And that's the thing. People don't realize that as a financial planner, you're not hurting me. You're not hurting Millie. You're hurting yourself. Yep. Right. In the long run, you're the one dealing with your finances. You're the one setting up for your future. Now, financial planning, again, like we said, isn't just the budgeting. It isn't just your day-to-day spending.
Yeah.
It's also your future. So I, as a financial planner, as an insurance, as mutual funds, because I went through the whole gambit, my favorite thing to sell was life insurance. But not life insurance for me, life insurance for children.
Okay.
Now, for any of you watching, I have insurance policies for every one of my children under mine. The reason some people are like, Melissa, isn't life insurance morbid? Excuse me.
Absolutely
and
not.
I'm like, no. I said, you think about it. I have 3 children, right? I've given birth to 3 children. My 4th is a bonus. But I've given birth to 3 children. And God forbid, and I'm not a God-fearing person, but God forbid something happens to one of my children. Number one, I am going to be so out of it. I'm going to be distraught. I'm not going to think straight. Yeah. I am going to most likely be drunk and out of my mind, stoned in some ditch somewhere,
It'd be
praying for death
devastating.
because
That's the worst thing
you know
I
what I
can
mean?
think of to happen to a person.
Exactly.
Yeah.
Right. So I don't, maybe I'm not going to want to work. I'm not going to be one around people. I'm not going to want to do anything. So if I have the insurance on my children isn't to go out and party if something happens to them. It isn't to go on vacation. It isn't to do any of that. Life insurance on my children for me was that, okay, their funeral or whatever I need to do after they've passed is paid for.
Mm-hmm.
Secondly, if I can't go to work, I have something to assist in my finances while I'm healing.
Yeah.
And I don't mean healing as in it's all good. I mean healing just to the point where I can function.
Yeah.
Right.
Yeah. I mean,
and that was the trick for me.
Yeah. And
critical
illness. Critical
illness was another one.
Awesome. That's another awesome
Love
product that not a lot of people, not enough people really know about. And that's not something that a lot of, it's not something that a lot of people have, but it is getting more popular and I'm happy to see it. So for people who don't know what that is, critical illness insurance is a form of insurance coverage that you can get that will kick in if you are diagnosed with a life-threatening illness. So usually the big four are cancer, a heart attack. What are the other two? Cancer, heart attack. There's a couple more.
Seizure?
Traumatic brain injury could be one. It depends. It
Stroke.
Depends on the policy.
Yeah.
Stroke. Yeah.
There's multiple different injuries or illnesses that you can experience.
Exactly. So that kind of gives you the idea. So basically, if you come down with an illness that is going to threaten your life, this policy can pay out a lump sum. So it's like a life insurance, but you don't have to die. So a lot of people, depending what people use it for, right? So some people might use that money to keep them afloat while they're not working, right? While they're going through treatments or going through chemotherapy or something like that. They've got this money that they can live off of while they are getting back on their feet. Some people might use it to pay off debt. So if I've got a critical illness policy that kicks in, maybe I want to get rid of my mortgage because that'll take a huge weight off my shoulders and give me the ability to kind of focus on getting better. Some people might use it for medical treatments. If they've decided that, they're going to make a last ditch effort to do something or other and they want to go to the Mayo Clinic or something like that, they've got the money to do so. And then again, depending on your situation, some people might use that money to make their last days as good as they possibly can be for their families.
But again,
all kinds of uses for it.
With critical illness, it doesn't have to be, it's critical illness, but it's not terminal, right?
Correct.
It's
yes.
critical, right? So,
if you're recovering from a heart attack.
Yeah, it doesn't have to be a terminal.
You don't have to be dying.
Yes. Yeah. It just has to be a critical illness or injury. Now,
I like could kill you, but didn't.
Yeah. Again, I liked it for children as well. And this is not something we talk about even closely enough.
Yeah.
How many children in Canada and the US alone are diagnosed with critical illnesses daily, right? Yeah. We don't talk about children who come down with leukemia, cancer, heart conditions, all of these things. We don't think about all those now
because it's horrible to think about.
They are, but they happen, and they happen a lot more than we realize. And if we have critical illness insurance, not just on ourselves, but also on our children, a lot of parents will get critical illness on their children. And then if something happens to their children, they have money to cover their living expenses so that they don't have to leave their children alone in a hospital while they are getting treatment.
Yeah.
I don't know how many parents that we did studies on in Investors Group or IG, how many parents are unable to be with their children because they have to continue working.
Yeah. Yeah, it's really, really hard. And I had a thought and it's escaped me.
While you're trying to remember that, with critical illness though, when it's like life insurance, to my recollection, it's like life insurance, where if I have a life insurance policy on my child, it automatically transfers over to my child when they reach the age of majority.
You've got the opportunity
illness
to
does that as
convert it.
well.
Yeah, you've got the
Yeah.
opportunity to convert
Yeah.
it to a policy, a standalone policy when the child reaches majority. So yeah, that way they can pick it up
and
take
they
it with
don't
them.
have to have medical at that point.
They don't have to prove that they're insurable again at that point.
Yeah.
So yeah.
So that's another benefit.
Yeah. I mean, it's like, you don't necessarily want to talk about product all the time, but there's definitely things out there that people aren't aware of because they don't have a financial planner and they don't talk to someone about, what they might need. And to be honest, there are some advisors who they feel uncomfortable talking about insurance. They don't want to talk about death. They don't want to talk about disability. It's all happy fun times, when the market is up, and then they stop taking your calls when the market is down. And no, I mean, if you're going to be a proper financial planner, you've got to be willing to be there for people when shit's hitting the fan too.
Yeah.
I remember 2008. I'd been in the business just a couple of years, and the market did nothing but go down for about 4 months straight. Every single day, the market was down like 200 points. And after the first couple of weeks where it was a big deal in the news, it just kept going and just kept digging itself deeper, and then the economy is falling apart. And it was a really scary time to be an advisor. I spent a lot of time on the phone doing what I called talking people off the ledge. But that's where a good advisor is going to prove their worth, is when things are horrible and you're thinking about bailing out on your plan. A good advisor is going to remind you, okay, we knew this could happen. We talked about this. We've had a discussion about how we would react when the markets went squirrely, as they will inevitably do, because this is what markets do. And remember why we set this up. We put you into an investment because we believe that this is going to help you ride out the bad times as well as take advantage of the good times. And don't freak out. Everybody relax, go away, and we'll take care of things as they come along, because there will be market downturns, as you can see outside today. I think the market's down another couple hundred points, but this is just
what
how
goes down
will come up.
Must come up.
Yep, exactly.
Yep. And that's the panic mode.
And that's the panic mode, and that's what a good advisor will do, is talk you out of that. This is the thing with investments that always baffles me a little bit. They're the one thing that no one wants to buy when they're on sale. Like when markets are down, that means the prices and you don't ever actually lose any money in an investment, a good, proper investment. We're not talking crypto. Let's not even go there. Crypto, interesting concept, not ready for prime time as far as an investment that I'm going to recommend to clients. But having said that, the markets go down. That means you are paying less for something that is going to increase in value, right? You don't lose money unless you sell something for less than what you paid for it. So when you're retired and you're starting to draw down from your investments, that's when we start talking about having some buffers in place. So having a year or 2 years worth of your income payments from your RIF in cash or in a money market or in something very, very low risk. So that way, if the markets are going crazy around the time when you need to pull that money out, it's not involved. Right. So that's a nice little strategy that we often use. And again, it comes back down to no plan is ever static and set in stone. You want to make sure that you're adjusting it so that it's appropriate for your circumstances. So when you're getting older and you're starting to look at withdrawing from it, you want to make sure that the investments are suitable for that version of you, which may be different from the you who's 20 years old and is setting up an RSP with the intention of not touching it for 40 years. Two very different strategies at that point. Yeah.
Sorry, my daughter was calling me in the middle, and I'm like, "What's going on?" She knows I'm in the show. She might have forgotten, but she knows I'm in the show. So I was like, "I'm in the show. What do you want?"
Kids, man, I've got it. Well,
I know.
And this is the thing with working from home, right? Is that it was, and you know what, the whole working from home thing. Like, this is my home office. Welcome to the mess. You can't see the mess out of frame, right? Yeah. Is that a cat?
Yeah.
Yeah. Mine's rampaging around the house here somewhere. She wants out so desperately. She can taste it. But that's, oh my goodness. But that's the fun thing about working from home, is that we've got the opportunity to hang out with our pets and our families. And COVID has not been a good thing but there have been good things that have come from COVID. And one of them has been the ability to work from home or work out of an office in a really viable fashion. It was actually kind of amusing how quickly, when lockdown became a thing and we started to realize that this might not last 2 weeks, it was a really interesting how quickly the insurance companies, the investment companies all got on board and got the technology up and running. So I can work from home, I can work virtually, and it increases my reach. So I've got clients all across Ontario. Some of them I may never actually meet in person because we're just too far away from each other, but it works because the technology makes it work. So the way we do business as advisors is changing.
Yeah.
Yeah.
Yep. So I'm going to have to end this, not yet, but I will have to end this about 2:50.
Right.
Just, it's been about
No, it's okay.
18 minutes.
This is life.
I guess
life is more important.
She hurt her foot really bad, and she said she can't walk without crying. So she wants me to pick her up from school today. So
that's a pretty good excuse.
I'll do it. Yeah, so I'll do it, but that means I have to leave 10 minutes early, but that's okay. So financial planning.
Yes.
So biggest takeaways, and I'm not talking about takeaways just to end it at this point, but biggest takeaways is one, it's not all about budgeting.
Yep.
The budgeting is actually is hugely important, but there's different ways to budget based on your style, right?
Absolutely.
Even as whether you're like me and you write down all your bills, whether you are, have a calculator or QuickBooks or an actual budget, even if you write checks or do everything online banking, whatever that looks like, budgeting can work for you and it doesn't have to be hard.
Absolutely. I've always said that budgets are like diets. The one that works is the one you're going to stick to. And like you say, some people are very adamant about tracking every penny. Personally, for me, I don't do that. I've got a really good handle on what's in my bank account on any given day. And, I don't do automatic bill payments because I like to be the one in control of when that money goes out, but that's what works for me. So a lot of those conversations that you have with your clients is trying to figure out how you can get them working with something that's going to work for them. Usually the hardcore spreadsheet people, they're way ahead of you, and they're all they come in with their Excel sheets, and it's all done and taken care of, and it's amazing. And then for other people, they every once in a while, I will have a new client come in, and they're just so overwhelmed by it all, and that they've completely shut down. So the first thing we do is, okay, well, let's take a look at your mail. And I've literally had people come into the office with a garbage bag full of mail that's been unopened for several years. And the first thing you do is you take it all out and you get it into the daylight, right? Just spread it all out, pile it all up, shred everything that's not relevant anymore, and get clear on what your situation actually is. And then when you've done that, then you can start figuring out how to move forward with a budget or with a savings plan or anything like that. The very first step is always to get clear.
Yeah, for sure. I 100% agree. Second thing is look into the different ways your future can hold. We're not just talking about retirement. We're talking about vacation planning. We're talking about, if you do want to send your kids to secondary school, not all of us are doing that anymore, but if you do want to plan to send your kids to secondary school, if you want to, buy your dream lake house or mansion, if depending on what your goals are, finding out if you are set up for those goals, right? Not only that, making sure, and I will talk about insurance again, because that was my favorite part, which is why I talk about the product, because that was always my favorite part, was making sure that you're set up for the just in case.
Absolutely.
Right? Because we don't know when our expiry date is. We don't know when shit's going to hit the fan. We don't know.
Yeah.
Right.
Well, this is what makes planning an actual job. Because if we and
it's not even planning for when it happens, it's planning if it happens, right? Where, if you're putting money aside to and I think with the critical illness, there is something different with that as well. If you reach a certain age, I think it is.
Some policies will
there's a
allow you
payout.
to, yeah. So some policies will have what we call a return of premium extension on it. So when you reach a certain age and you haven't used the policy, you will get at least a portion of the premium that you paid back. So it's sort of a little guarantee on the back end. Insurance is one of those things that it's not just one thing. There are so many ways that you can structure an insurance portfolio that will you can use it as a savings plan to some degree. I'm not a huge believer in, let's buy whole life and that should be where all your money goes. No. But yeah, you can use term policies, you can use universal life policies, you can use critical illness and disability. Long-term care policies are starting to become, people are starting to not use them as much because they've gotten very, very expensive in the last few years. But certainly when they came out, you were in the business when they came out, they were a huge leap forward in the idea of insurance coverage. Now we can use a universal life policy in almost the same way. But be that as it may,
again, I have a universal.
Yeah.
When I became a client, because I was a client first, when I became a client, it was when my second child was born, and my husband and I had just gotten married, and I'm like, I need life insurance. Like I need it. And at that point in time, I got, I think, $350,000 life insurance policy.
Okay.
I was 25, almost 26.
Non-smoker?
No, I was a smoker.
Okay. Even at that, because you were so young, it's relatively cheap coverage.
So with myself and my 3 children on my policy, I think the total, each of them is 10,000, and then mine's 350. And I think I pay 113 a month.
Not bad.
For life. Yeah. But I wouldn't be insurable now.
And there you go, right? So insurance is one of those things you don't want to put it off until you think you might be close to needing it, because the older you get and the sicker you get, the less insurable you are. And it'll come to a point where an insurance company won't take any amount of money to take the risk that something's going to happen to you in the short term, which is kind of demoralizing in a way. It's like, you mean I'm not worthy? You don't want my money? And they're like, we don't. We don't want the risk. We don't want the risk. Yeah.
And that's, what I'm a coach, right? And I'm careful who I work with. I won't work with people who aren't ready to change, because it's not that they're not worth it, but I know that I'm running the risk that they're not going to be happy because they're not doing the actual work.
Yeah.
Right. So if I had waited for my life insurance policy, I've had a cardiac ablation. So I've had a heart condition. I have had, a couple other things go on in the last few years. I'm still a smoker. So, I wouldn't be as insurable as I used to be.
Yeah. Very few of us are. I mean, and it's not something that we think about necessarily, because we're all going to be young forever, right? But life does not work that way. And a lot of what we do, certainly as insurance agents, is talking to people about life does not work that way. And you have to be prepared for the way that life can work. And sometimes the way life can work is really shitty.
Yeah. Or people relying on their work life insurance.
Well, and that's the thing, or God forbid, mortgage life insurance. That's I got a whole rant on that.
None of us like that. None of us like mortgage life insurance. Do not get mortgage life insurance unless you are uninsurable.
Exactly. Well, and if you're uninsurable, then the mortgage life insurance won't help you either. So here's the explanation of mortgage life insurance for those who are wondering what's wrong with mortgage life insurance. Because it sounds great, right? So when you're signing up for your mortgage, here's another 2 ticky boxes on the umpteen pages of documents they want you to sign. Well, this is for your life insurance. That's for your critical illness. Just check that. It'll be fine. But what they're not telling you, because your mortgage agent is very rarely also a qualified life insurance agent. 99.9 times out of 100, they are not really aware themselves of what it is that they're giving you. So a mortgage life insurance policy is an insurance policy that's attached to your mortgage that pays off the balance of your mortgage if you die. Sounds great, except that policy is not owned by you. That policy is owned by the bank, and it's used by the bank to cover its liability. It's covering the bank's butt, not yours. You are paying the same premium all the way through. And the policy only pays the balance of the mortgage. So you're paying the same premium all the way through, but your mortgage balance is going down and down and down over time, ideally, because you're paying it off. So whether something happens to you right away when the mortgage is $500,000, or it's towards the end and that mortgage is $5,000, you're going to pay the same premium and it's only going to pay for the mortgage balance. It's not transferable. It's not. And then there's the underwriting issue. There have been cases where insurance companies have determined after the fact that, no, you know what, this person isn't insurable and we would not have covered them. So they'll say, well, we'll give you your premium back, but you're still on the hook for the mortgage. And people are going through their lives thinking they've got this coverage when they really don't. So again, like you said, I mean, mortgage insurance coverage is certainly better than absolutely nothing, but not by a hell of a lot. So if you're young, getting your first house, one of the first things you should do is starting to look at getting life insurance on your own, that you own, that you take with you, because and it's likely to be a whole lot cheaper as well.
Part of financial planning, when we go through your application or your thoughts on life insurance, it's different at different stages, right?
Absolutely.
If you've just gotten a $500 mortgage, you want to get enough money in your life insurance that covers that mortgage. Yep. That covers cars, that covers, if you want to, there's like a whole questionnaire we go through. What do you want to pay for?
Yeah.
If you pass away tomorrow, what do you want covered?
Yeah. You don't need life. Put it this way, you do not need life insurance. You as an individual do not need life insurance because you're dead. It doesn't matter. What you need life insurance for is for those people who are going to be financially devastated by your loss. And emotionally devastated, but it is mostly for financial devastation because that's the things we can put numbers on. And if someone is going to be financially devastated because you died, that's when you need life insurance. Bottom line. And if you don't have that person in your life, then yes, you could make a case that you don't. And you don't necessarily need the same amount of insurance all the way through. When you're young and you're starting out, you have small kids and a mortgage and a whole pile of debt, and you're just kind of getting yourself established. That's when you need the most life insurance, because that's when the effect of your death can be the most devastating. As you get older, so like my husband and I, no kids, mortgage is going down, we have life insurance that's going to cover everything that we need to, but we don't need the same kind of level of insurance that you with 4 kids needs. We just don't, because the only person who's going to be, the only creature who's going to be financially devastated by either one or both of our deaths is the cat. When you get to the point in your life where you've got more assets than you have debts, that's the time to start looking at your insurance policies. And the nice thing about a lot of term life insurance policies, if the main focus of your insurance is to cover your debts if you were to die, the nice thing about a lot of term policies is that you do have the option later on to convert them to a permanent policy, because a permanent policy can provide a lot of benefits when they're talking about building your estate. One good use for them is, let's say you've got a camp or cottage in the family and you want to keep it in the family, but there's going to be capital gains tax on that cottage on your death. If you've got a whole life policy that would cover that amount of capital gains, boom, done and dusted. The kids don't have to worry about trying to pay off taxes after your death. So there's all kinds of ways and strategies that you can use insurance.
That is another thing,
right?
Business. Ooh, let's talk about that quick before we go. Okay. So one of the things I even learned, so I was a paralegal before I became an IG operative. And I'm gonna say operative because I like that word. Before I worked for IG, I worked for lawyers. And so it was real estate. It was wills and estates. It was all of that, right? Those are my 2 favorite. With that, succession in business, right? Yeah. When you're doing business, it's not just the finances of the business. It's not just getting the business up and running. It's what's going to happen to that business. Something happens to you. Do you have partners? Are you leaving it to your children? What are you doing with all of that? So it's planning for that as well, right? That transition.
What's the structure of the business? Who's doing what's going to happen? And there's employees too. So what happens if you run some sort of artisanal something or other, and you've got a craftsman working for you who is the heart and soul of your product? What happens if something happens to him? right? Will you be able to keep the business going while you try to replace that person? So yeah, there's all kinds of ways that you can use insurance to fund buy-sell agreements, for instance. So if someone passes away or wants to retire, and there's it's too complicated to get into in the 6 minutes we've got left. But the long
Yeah.
and the short of it is if you're setting up anything in your life, you need to have a good conversation with a professional about insurance. I think that's yeah, do that.
Yeah. Absolutely. All right. Well, unfortunately, I do have to cut it short because the kid needs her mom.
What are you gonna do? It's fine.
I
But no,
know.
thank you very much for the opportunity to chat with you on this. Always happy, like I said, always happy to talk to new people. If you're in Ontario and you need financial planning services, let me know. We'll talk and go from there.
Absolutely.
All right.
Everybody watching, if you are in Ontario, connect with Millie. Trust me. Just because I'm no longer a financial planner doesn't mean that I don't see the benefit in it. It didn't work for me. I lived in a very rural community that was very either religious or farming. You didn't bring financial planning into that community. It didn't work, so it didn't work for me. But Millie is amazing. Go and check her out again. Link in the description. Go set something up with her if you're in Ontario. Even if you're not in Ontario and you have a couple questions, absolutely reach out to Millie and,
Sure.
maybe she can connect you with somebody
Probably.
that's local to you.
More
So
likely.
go and check that out. And if you want to reach out to either myself or Millie, again, links in the description. Other than that, I think that's it. Go like and follow the show. Pick us up on LinkedIn, please. Okay, so here's the dilemma with LinkedIn.
All right.
My profile on LinkedIn for the show is Melissa Krechler, giving you something to talk about.
Yeah.
I have 135 connections on that profile. I'm just about able to go live. Now, the show's page, the company page for the show, has 14. 14. That's it.
You're going to need a couple more.
We need more likes. We do. Even if I get enough, we need 150 to be classified as being able to even go live on LinkedIn. Okay. So if people want to go check that out, Melissa Krechler, and it'll say giving you something to talk about and have the logo for the show. Go and like and follow that. TikTok, we also need about 800 more people. So go like and follow us on TikTok. I know it's 1,000. So Go and do that there. And for anybody else, join the newsletter. If you'd like to be a guest on the show, reach out. We're always looking for new guests. And if you would like to see a topic featured, we talk about various topics on the show that are all about diversity, doing the hard topics, and bringing awareness to topics that people just aren't talking enough about. So come and join us on the show. Reach out to me, Melissa Krechler, at justalivetv.com. Sign up for our newsletter. Thank you so much, Millie.
You're welcome. Thank you for having me.
Absolutely. All right, Just a Family. That has been your episode for today. I hope you've enjoyed it. Reach out to myself or Millie, and I will see you on the next episode. Bye.